And should Sri Lanka, the government, be more proactive in attracting FDIs? And should the private sector also be more proactive in that respect?
Thank you. Yes.
Asanta Sirimana from Bloomberg. Has the Sri Lankan government asked for any waivers of QPCs or extensions of SBC? One thing. Other one is, has any discussions gone on about the domestic assets of the central bank? The earlier QPC was like a flat one. There was just a ceiling which didn't change. Any discussions on reducing it going forward for the new program QPC?
Did you hear the second? So I didn't hear the second part.
Yes,
domestic what?
The
Sorry.
central bank domestic asset, there's a ceiling which was flat. It was not, there was no requirement to reduce it in the current program. Has any discussions gone on about it, about reducing the domestic assets of the central bank in the new
the financing, you're saying,
the domestic assets stock of the central, outstanding stock of domestic assets of central bank balance sheet.
Central bank balance sheet.
Yeah, balance.
Thank you. First question on FDI. So obviously, FDI also is crucial and the key importance for putting together the macroeconomic framework and also looking at what lies ahead for the country. So attracting FDI requires demonstrating a track record of good policies, macroeconomic policies and beyond. Obviously, having macroeconomic stability like now, having policy continuity and good economic policy like now, policy predictability and sound reform implementation are all very, very important. And these are things that we have stressed as a principle in our discussions with the government and all stakeholders. In addition to that, the strong economic recovery that Sri Lanka is undergoing now, the progress on the debt restructuring that is taking place, and the authorities' commitment to our program and to the broad reform agenda that they have set forward, all send good signals, positive signals to investors and to the markets and other entities. And so that's very important in that this policy continuity is still being communicated. Now, beyond macroeconomic stability, there should be more a more open or a better intermediation for the business environment to reflect the same principles, right? To attract and retain foreign investment. So in that regard, also fostering competition, improving the infrastructure in the country that is available, improving connectivity on transportation, logistics, port access, and so on, digital infrastructure, establishing trade agreements and all that, FTAs. These are all very important and go a long way toward making it easier for businesses that want to grow to be able to grow and foreign investment to come in. Alongside of that, I would say domestic policies are very important, particularly with respect to labor markets, the labor market competitiveness and having access to a good stock of capable workers is crucial. So in that regard, removing rigidity or relaxing rigidities and streamlining labor laws are very important. Now, of course, FDI and investment also sometimes come hand in hand with tax exemptions. One structural benchmark, or two rather, structural benchmarks under the program have to do with the SDP and the Port City Act, as you know, on tax exemptions. This is something that we have been discussing very closely with the authorities, and we want to see progress on those fronts. And there is progress there, as you probably have already seen. In our view, obviously, tax exemptions have a role to play, but they shouldn't be the only tool to be used to attract investment and FDI. Okay, thank you.
So there was a question on whether waivers were requested.
The waivers of QPCs, no, we have not received any request, and I cannot talk about the QPCs right now because they have not been evaluated, and our executive board will do that. But obviously, this is something that we will be discussing. On the central bank domestic assets, so there's no change there. So, again, I cannot say too much about the current review, but if you look at the fourth review, it gives you an idea that the trajectory. So that's all I can say for now. Thank you.
So just if I may, Evan,
Yeah.
so if this is about the quantitative target of net credit to the government,
yeah.
right? So that one relates to the need to safeguard central bank independence by refraining from monetary financing of the budget. So that's the link between that specific quantitative target and the numbers you would see there.
And the number has been set from the beginning of the program on the back of the new Central Bank Act. One key parameter of this act was to prevent financing of the government and break the fiscal dominance. That is being observed, and again, I cannot talk about the current review, but as of the fourth review, obviously that has been respected. And our expectation is that it will continue being the case going forward.
Thank you. So I'm mindful of the time. So can we take one last round of questions? Yes, gentleman in front here. Taken out the mic. Yeah, thank you.
Thank you. I'm Sanat Nanakar from the Island newspaper. You painted a positive picture about vehicle imports, including luxury cars, which are coming to the country in numbers. So my question is, the vehicle imports, the estimated value of the imports is going to be around $1.5, $1.8 billion for 2025. In this context, doesn't the IMF think it's a potential vulnerability to rebuilding reserves and managing exchange rates? And more significantly, are you satisfied with the government's policy framework on managing essential import expenditure, curbing import expenditure on luxury goods like cars? Thank you.
Yes, I'm Lalin from the Sunday Observer. You have prioritized poverty as a key factor to again sustainable growth, but poverty still remains elevated and quarter of the population still remain below the poverty line. Any specific recommendations do you like to make to the government?
Thank you.
Thank you.
Evan, do you want to start tackling maybe the question on the
Why don't I handle
NVs?
the first question? I'll pass on the poverty question to you, Martha. So yes, the vehicle import numbers have been impressive and stronger than we anticipated. It's a good development in the sense that it seems that the domestic demand and the ability to intermediate those flows is there. Obviously, the size remains to be seen, but the numbers that you mentioned is something that sounds plausible to us as well. Now, of course, one has to think that these vehicle imports and the big increase of those, the vast number of these may be associated also to other decisions, including also the pent-up demand. The ones that after you have stopped imports for so long, there is enough of a momentum to push them forward and stay there for a little while. But the question is how much of that could persevere. In terms of the link to reserves, that's a good one. So obviously, the reserve accumulation is an outcome of many variables, not just the imports of vehicles which remove dollars from the market, but also offsetting aspects with strong tourism, strong remittances, and ongoing general strength on the export sector. And so there is a counterbalancing act. You have seen that also with the central bank's ability to continue accumulating reserves on the net international reserve target or flow rather in our program. The central bank is on pace or ahead of pace. So our expectation is that this is not affected now. Obviously, for next year, and what would that mean, that remains to be seen. And then it goes back to an earlier comment that I made, that trying to estimate that level of intensity of reserve of vehicle imports it's a key parameter in this discussion. And this is something we're discussing both with the central bank and with the government. On their second question about satisfying if we're satisfied with the policy framework for import expenditure. So first of all, many things should be mentioned here in that it's not just the government import expenditure, in particular policy. The country is in a big economic recovery, and so the way the imports are being judged and the intensity of these imports is still remains to be seen on a steady state basis. Generally speaking, we have a lot of, we want to see greater capital execution from the government's point of view, from the greater spending towards capital execution, which by itself will be more capital intensive and import intensive. So the import expenditure aspect of that will have to be judged in accordance to this, especially next year as well. In terms of frameworks on allowing more intermediation, the national single window and other tariff and other policies, that's a live discussion we're having. We think more needs to be done to intermediate, to allow for easier importation, in line with the objectives of the government's policy priorities for its trade policy. And I can pause here. I can turn it over to you for the property question.
Sure, thank you. Thank you, Evan. So yeah, thank you for your question. Poverty levels are very high. I mean, looking at the latest estimates published by the World Bank, we do see that although growth, the economy is recovering, the levels of poverty are actually higher than the pre-crisis period. So we still want to see a downward trend going forward. So in the context of the IMF program, protecting the poor and vulnerable is a core pillar. And in practice, what this means is that the program includes what we call a floor on social spending. This means that the government needs to spend the minimum amount to protect the poor and vulnerable. And this is a target that we assess on a quarterly basis, whether it is met or not. So at the time of the fourth review, we assessed that the end March 2025 target was met by the authorities. They implemented a number of measures. They implemented a number of steps early 2025 to be able to reach that target. These steps include, for instance, increasing the amounts of cash payments to selected categories in the Aswesuma welfare scheme. They also extended the benefit payment period for some of those schemes. They disbursed school stationery allowances. So all of these are positive and encouraging measures. But beyond looking at this specific target on how much the government is spending on social safety nets, we also hold discussions with the authorities on the reforms they're implementing or they're envisaging to implement in order to strengthen the coverage, the targeting, and the adequacy of social spending. So most of you probably know that currently they're working towards completing the enumeration and onboarding new applicants to the Aswesuma program under the second phase. This is something that's positive. And the authorities also plan to launch this recertification exercise, which is aimed at improving the targeting of these social protection programs by addressing inclusion and exclusion errors. So all of these are very welcome developments. In addition to that, I think one thing that's important to flag is that all the structural reforms that the authorities are implementing, are pushing forward with, are also expected in the medium to long term to trickle to the rest of the economy. So to bring down poverty rates, you really want to accelerate economic growth. Let me stop here. So I realize we are out of time as well. So maybe let's close for today. Yeah? Okay. So this will be the end of our press briefing. So thank you so much, ladies and gentlemen, for joining us today, for showing your interest. We look forward to seeing you at our future press briefings. But in the meantime, if you have any follow-up questions, any issues you want to raise, please do not hesitate to reach out to the resident representative office based here in Colombo, and we would be happy to engage with you. Thank you so much. Thank you for your time.